They have estimated 180 for the current year, and this is put it the date is that year 31st December 2008. Is it right? Fine. What they are asking us, they are calculate the tax expense that will be shown in the profit and loss account for the year 2008. Is it right? That was actually agreed, and if the amount that was actually agreed and settled with the tax authorities with respect to 2007. 2007, how much they have paid? They have paid, it is right? They have paid how much? 165, is it right? 165. And how much is the current year? Current year is going to be 180, is it right? Means, see, they have estimated how much? Yes, fine. Now, what we have to do? We have to make sure that how things are working, is it right? Now, whether it is a under provision, is it right? It is a under provision or it is a over provision. In the previous year, is it right? In the previous year, see the thing, in the previous year, how much they have estimated? They estimated 150. Is it right? In the previous year, how much they have estimated? 150. And actually, how much they have paid? Is it right? They have paid how much? 165. If they have estimated 150 and they have paid, see the thing, they have estimated how much? They estimated 150. Is that? And they have paid how much? They have paid 165. Is that? This is option A. It is how much they have paid extra. They have paid how much? They have paid additional. They have paid additional how much? 15,000. This is under provision or this is over provision. Please let me know. Is it a under provision or it is a over provision? It is a under provision or over provision. See, whenever they are making an estimation, is it right? Whenever they are making an estimation, it is a provision. Whenever they are making an estimation, it is a provision. Whenever they are making it a paid, this is actual. This is actual. When we say it is going to be they have estimated 150, but they have paid more. It means what? It is a under provision. Is it? It is a under provision. Fine. Now, what is the point number B? We say, is it? Point number B. Same rule applies here. They have estimated how much? They have estimated, this is the provision. Is it right? This is the provision. They have estimated how much? 150. Is it right? They have paid how much? they paid 140. The estimation is more, the payment is less. Is it? The estimation is more, the payment is less. This is the example of over provision. How much is there? 10,000. In the previous case, the estimation is 150, but we paid how much? We have paid more. Is that? We have underestimated. Is that? We have as simple as that, we have underestimated. Here we have overestimated. Fine. Now, what we have to do, we have to make sure that how the things will happen. Is it right? Now, point number A. Is it right? Point number A. This is the first. We have to make sure that how the things are, how we have arrived at the point as such. Is it right? This is the over. Fine. That's all. Nothing is there. Is it right? When we want to make it a statement of profit and loss account. Is it right? Extract. We have to start with the current year end. Is it right? Current year end is how much? Current year end estimate. Is it right? Current year end estimate. How much? See, make it sure. 31 December 2008. How much is there? 150, 180,000. Is it? We are talking in terms of, we have to make adjustments for the last year. Is it right? That's very important. Is it right? To 31st year 2007. Is it right? Year 2007. Year 2007, how much we have? We have paid. Is it right? How much we have settled? Is it right? The amount that was actually agreed and settled is it with tax authority. Paid is how much? If it is paid is how much? 165. Is that? Next, estimate. Is that? Estimate is how much? 150. Is it right? Estimate is how much? 150. What we have to, the 15,000. Is it right? 15,000. 15,000 is nothing but we have under provision. Is that? We have under provision. Is it? This under provision has to be added to the current estimates. Is that? Means first we have to pay last year. Any outstanding is there, we have to pay first. Is that? Any outstanding we have to add to the current year. Is that? This is last year under provision. Is that? We have to add to that estimates of the current year. Means how much we are going to have? 195. This is going to be categorized as a income tax expense. Is it? To 31st December 2008. The second one. Okay? The second one. What we are talking about? The point number. Is that? The second one, make it a statement of profit and loss account extract. Is that? Statement of profit and loss account extract. Okay? Fine. Now, how much is the estimates we have done, current year estimates, is it? Again we have to start with the current year only, is it? Current year end estimate, is it right? Current year end estimates, make it 31 December 2008. How much is there? 180,000. Is it? First we have to settle the last year, is it right? How much we have paid? We have paid how much? 140. Is it right? We have paid how much? 140 minus estimate. We have made estimate of how much? 150. We have made estimate of how much? Now what we have done? It is minus. Is it right? It is minus. How much is the minus? 10,000. Is it right? It is what? Over provision or over estimate. How much you have to pay? This year income tax expenses will be how much? This is the income tax expense. Now, all must see which accounting year it is pertaining. Is it? Which accounting year it is pertaining? We have to identify it exclusively for that accounting year as such. Is it right? What is the concept of deferred tax? It is the estimate of future tax consequences. Is it right? And events recognized in the financial year of current and previous periods. See, this is where it happens, is it right? See, and it is very realistically it will happen. If that is the reason taxation is you have to be very accurate. We cannot mix up with 1 year tax with another year tax. 2018, 2019, 2020 and 2021, is it right? If we take, definitely, if it relates to which year, that's very important. If it is related to 2019, we have to make sure that it has to be shown in 2019 only. Not only that, what will happen? Definitely, we will also have the estimates for the future taxes. It is a provision. See, if you remember something, there is a concept of prudence. Is it? In accounting, the concept is what? Prudence. Prudence is nothing but we have to be very cautious in making the provisions. Is it right? You make more provisions. Is it right? See what happens, whenever you are making an estimate, is it right? You estimate more. Is it right? You estimate more. Nothing will happen. You estimate tax as 2,000. Is it right? In the year 2022. Current year you estimate tax as 200,000, but you pay actual, is it? You pay how much? You are paying only 180,000. Nobody will question you. Is it right? You are means if there is a over provision, is it right? If there is a over provision, nobody will question you. Fine, good, but the problem, the issue comes with where? The issue comes with you are estimating what? You are estimating 160,000. Is it right? But actually what will happen? You will end up paying with how much? Assume that you are end up paying with 210,000. Is it right? Means almost what will happen? The profits will get impacted by how much? The profits will get impacted by 50,000. Then the management will ask why you have underestimated. Nobody will ask if you are overestimating. You show less profits, the more provision, less profits. The less provision, more profit. You show more provision, is it right? But in actually what will happen, you are paying less tax, profits will not get affected that much. But if you are estimating less, is it? If you are estimating less and actually you will end up with paying more, then everybody will ask us why there is a misjudgment with respect to estimation as such. That is what it said. Deferred taxation is the basis of allocating tax charges to particular accounting periods. We should not mix up the things. Is that they are telling you again and again that which accounting period it is related, we have to take that accounting period only. The key to deferred taxation lies in two things. The accounting profit is the figure of profit before tax related to what? To the published accounts. Is it right? The accounting profits is nothing but the profit before tax. The taxable profit is the figure which taxation authorities base their tax calculation. This is what it says. See the thing. You have two different things. Now, you will have what? You have profit before tax. Is it? You have profit before tax. Now, from profit before tax, what will happen? You are making a provision. Is it right? You are making a provision. It's nothing but these profits are called as taxable profits. Is it? For us, we will take profit before tax. But what the tax authority will take? Tax authority will take taxable profits. Now, taxable profits and profit before tax are different. Accounting profit and taxable profit. There are two things are there. One we are talking in terms of an accounting profit and one we are talking in terms of taxable profit. Taxable profits will have lot of adjustments. Is it right? You will have lot of adjustments. Is that taxable profits will have adjustment. Now, what are the lot of adjustments? Any adjustments with respect to previous year. Previous year taxes only. Okay, previous year tax related issues only. You will have in terms of current year and you will have in terms of what is the future. That is the reason that we are not concerned about accounting profit. We are concerned about tax. And whatever we are doing during this phase, is that during this phase, what we do, we are only taking into consideration the taxable profits. In this process, what will happen? The difference between an accounting profit and taxable profits is what? There are two things. One is we are talking about a permanent difference and we are talking about the temporary difference. What is the permanent difference? Permanent difference means definitely it will be carried forward, it will be settled over a period of time. Whereas temporary difference is nothing but whatever happens in the previous year, it has to be settled in the current year itself. We should not carry forward. You should not carry forward. That is the thing. Now now we will differentiate. We are just going one step further. Is that we are just going one step with respect to what? With respect to the temporary difference. Temporary difference is nothing but the profit and loss account. Is it right? Which we are going to do in the next phase. Is it right? Permanent difference is with respect to the non-current assets. Is it right? That is the basic difference. In the question, they will ask us what is the amount to be in terms of permanent difference and how it is going to be. They will give the scenario and we are going to have to work it out with the temporary difference and with the permanent difference. Most of the time, if when I have gone through the questions, most of the time they are focusing on temporary difference rather than permanent difference. Now we are working on that issue as a entity should recognize a tax liability, is it right, or asset whenever the recovery or settlement of the carrying amount of the asset would have impact on future tax payments. See what happens, in sometimes they will have the tax refund, is it right, if you are paying excess tax. In sometimes you have to pay additional tax. Is a tax difference you have to pay. Is a tax difference is nothing but it is called as a deferred tax. Means deferred tax, again, what is the rule of the deferred tax? Deferred tax is nothing but it has to be related with respect to what? It has to be related with the specific accounting period. They say very clearly, is that the liability will make future tax payments larger or smaller than they would be if such a recovery or settlement. Recovery is nothing but the tax refund, or the settlement is nothing but, we are talking in terms of payment, were to have no tax consequences. Means you have to, when we are talking in terms of the respective year as such, is that respective year we have to, if 2018 first settle 2018 separately, we should not pay the taxes of 2017. This is the issue, the core issue as such. We should not pay the taxes of 2018 in the year 2020. Now, what happens if that is the case? Definitely you have to make sure that how it is going to be identified and how it is going to be judged as a deferred tax payment. Deferred tax is using the liability method. Is it in which the deferred reference to the tax base. Tax base is nothing but the tax year. Is it? Deferred tax is nothing but liability method. Is that you are paying? See, there is option. Very simple. There is the option. What is the time period they will mention? They mention that if there is any adjustments in the taxes, you can adjust these adjustments in the next 4 years. Is it? As per the ACCA rule and as per the tax rules of most of the countries, you have the provision to, is it? Sometimes what will happen, you are delaying the payment of tax. Is it? Because of some reason or other, you have not assessed the taxes for some particular type of activities. Then you will realize that yes, we have to pay tax. Is that? Then what we'll do, we will make the adjustments and we will show it for a particular year. This concept is called as a deferred tax. In the examination, you have to calculate the temporary difference only. Is it? We have to calculate the temporary, which is likely the difference between the non-current assets. Is it? We are talking about in terms of what is the things we are having the carrying amount. See, the same concept is that carrying amount is nothing but as per the financial statements. Is it right? You will have the tax base, how we are working with, how much you have to pay, provided the provision as such, and how much we have estimated. Is it right? We have the tax base, we are making an estimation, and definitely whatever as per the financial statements and the tax base, there will be some temporary difference. Temporary difference will always be on the higher side only. Is it right? Deferred tax is what is the concept of whatever the temporary difference into tax rate. Is it? This is what. Now, the most important thing is how we have to account it. Is it as per the nominal account? Is it that as per the nominal account, what happens? The debit all expenses and losses, and tax is a liability. The moment we are talking it is in terms of liability, it should be on the credit side. Is it? This is what happens. This is happening when we are going to increase. Is it? When you are, if the liability increases, it should be on the credit side. Is that if a liability is decreasing? Is that if the liability is decreasing? Is it that it will be on which side? It will be on the debit side. Is it? It will be on the debit side. So means sometimes what will happen? You have to pay additionally. In sometimes you have paid excess, then you have to make the reversal of the entries as such. That's the most specific one. Is that keep it in mind? Keep it in the way we are going to carry out the. This is the original entry. I will write it. Is it right? This is the one. This is the usually. Is it? Normally we will say this is the original entry and this is the reversal. This is what they say. Is it? When we say why temporary difference is that much important is when there is a temporary difference, definitely what will happen? The deferred tax DT is nothing but the deferred tax will get affected. Here, permanent difference, nothing will happen. We will do this. That is the reason. They will not ask anything on permanent difference. They will only ask on temporary difference as such. What it says, what is the deferred tax? Is that, see, what is the tax? Assume the tax base. Is it right? The tax which you have to pay. Is it right? Assume that the tax you have to pay is how much? 160,000. What is the carrying amount? Carrying amount as per the provisions of the financial statements. Is it right? Assume that you have made how much? Definitely you have made 140,000. Just I am taking an estimate. Is it right? What happens? You have the difference. Is it right? It is exceeding the carrying amount. Is it right? It is a tax base is nothing but tax base is greater than carrying amount. If tax base is greater than carrying amount, then only it is called as a deferred tax. Okay. This is called as a temporary difference. Is it? This is called as a temporary. As simple as that. Now you have very clear. Is it? We have a clear. Slowly and steadily, clarity will increase. Okay. Slowly it will. The moment you start doing the exercises, examples, more clarity will come. But before you do that, we should have some basic theoretical concepts how it will work. Is it right? A deferred tax should be recognized for all differences. Is it right? Any differences should be settled down. That's very important. To the extent it is probably that the taxable profits will be available, which is deductible, temporary difference can be utilized. Any differences, as simple as that. Now we have very simple way of understanding. Any differences is there for the last year or what in the difference between a tax base and a carrying amount should be settled down in the in the current period as early as possible. If the deferred tax arises from entity making losses, assume there are some, in some cases, see, if there is a losses, is it right? If there is a losses, definitely we will have the tax advantage. Fine. See, there will be rules, is it right? If you are having losses, then they will say that you take the profits for average last 3 years and you can calculate, is that? But if you are having, if a firm is having losses, the firm should demonstrate that there should be a sufficient forecasted profits, is that sufficient forecasted profits which can be utilized in order to recognize it. See, we will not take the losses, on stand-alone basis. Is it a stand-alone basis? Means it means that we will not, you see, you have 3 years, year 1, year 2 and year 3. Is it right? Year 1, year 3. Year 1 is profits, year 2 is profits, year 3 is losses. Got my point? Then the rule says that we should consider all three average profits. Is it? We should consider average profits subject to the condition that this is not applicable. Otherwise, we should have a sufficient forecasted profit. Sometimes what will happen? We are taking it for the previous years. If the rule says that we have to take it for the future years also. If there is any losses, is it right? Any losses. In future, they will have some profits. Is it right? Then as per the rule, because taxes is not available blanket rule, it will not available to all. Is it right? Taxes are very selective. In some cases, they will give exemptions. In some cases, they will not give exemptions. If there is exemptions, then it is going to be taken for the future. They will say that if you are earning profits for the next 3 years, year 4, year 5, year 6, then what will happen? In that case, that this tax is subject to payment. This tax is subject to payment. Means we have to consider what happens in the previous cases and what happens in the future years also. Fine. Now, if by doing this, we will have a more clarity how the things will work. What it says, a company financial statement shows a profit before tax is how much? Profit before tax is 1000 in the year 1, 2 and 3. The profit is stating after charging depreciation of how much? Depreciation of 200 due to purchase on asset of 600 in year 1, which will be depreciated over 3 years life on a straight line basis. Means you are taking an asset of 600 for year 3 years. Is it right? Depreciation is how much? Depreciation is 200 per annum. Is it 200 per annum? The tax allowance is how much? 240, 210 and 150. Is it right? The tax granted for the assets are year 1 240, year 2 210, year 3 how much? 150. Income tax is how much? 30% of the profit. Apart from the above depreciation and tax allowance, there are no other difference between accounting and taxable profit. Is it? Now, ignoring deferred tax. It means if you ignore deferred tax, prepare profit and loss account extract for each of the year. Accounting for deferred tax. Is that means we are saying without deferred tax and with deferred tax. Prepare profit and loss account and financial statement extract for year 1, 2 and 3. Fine. First, what we have to do? We have to prepare without ignoring deferred tax. Is that right? Can I start now? See, this is where this is particulars year 1, year 2 and year 3. Is it right? Now we have to write this one minute. It is statement of profit and loss account extract. Okay, statement of profit and loss account extract. Now, how much is there? How much is the profit before tax? Profit before tax. Is it right? Profit before tax is how much? Each of the year 1,000, 1,000 and 1,000. Is it right? In less income tax. Is it? Put it as a note 1. Is it right? Put it as a note 1. Is it? Note 1. Particulars. Is it right? Particulars. 1 minute. Calculation of income tax for year 1 to year 3. Particulars 1, 2 and 3. Is it right? Now, whatever the profits they have mentioned, is it right? Whatever the profits they have mentioned. How much is the profit? This is profit before tax. Profit before tax is otherwise called as a accounting profits. How much is the accounting profits? 1,000. See, now you can understand what is the taxable profits and what is the accounting profits. Is that what is the whatever they have given in the In the question it is the accounting profits. We will calculate the taxable profits here. Now what they have mentioned, they have mentioned, they have accounting profits, is it right? Their profit is stated after charging how much? 200 per month, is it, per annum, is it? After charging 200 per annum plus, is it right? Plus we have, to the accounting profits we have to add what? We have to add depreciation. Why we have to add depreciation? Because we are having a tax allowances are there. Is it right? A tax allowances is granted for what? A tax allowances is granted for asset. Is it right? A tax allowances is granted for assets. This is, we have to, when tax allowances is granted, the rule says that to the profits, accounting profits, add depreciation less allowances. How much is the depreciation? Depreciation is 200. Is it? This is the rule which is going to be remain same wherever you are doing. Is it right? Depreciation is how much? Depreciation is 200. Less is we are talking in terms of tax allowances. On assets, is it right? This is on the asset, is it right? How much is the tax allowances? The first year it is 240, second year it is 210, third year it is how much? It is 150. How much we'll get? 100, 1200 minus, it comes to how much? 960. Is it? 960. 1200, it comes to how much? 990. I don't have my smartphone with me, okay? I have kept it on my charging. Is it right? 1200 minus 150. It comes to how much? 1050. This is called as taxable profits. Is it right? Now, what is the, see, tax at the rate of how much? What is the tax rate they mentioned? Tax at the rate of 30% on taxable profits. Is it? Tax at the rate of 30%. Now, 960 into 30, how much? (960) into 30, how much? 288. I don't have my phone with me, okay? Is it right? 990 times 0.3, it comes to how much? It comes to 297. 1050 times 0.3, it comes to how much? 315. Is it right? Now, how much you have to deduct? 288, 297 and 315. This is called as profit after tax. 1000 minus 288. It comes to how much? 712. 1000 minus 297. It comes to how much? 703. 1000 minus 315. It comes to how much? 685. Where 672? Where 672?
We will deduct taxable profit from tax at 30% or not?
$960 times 0.3, 288,
Yes,
1000.
it's correct. 288. Yes, it's correct.
Huh. Then how you have mentioned
No,
672?
I mean, if we will deduct from 960, deduct 288.
No, 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 no. Allah Kareem, no, 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 no.
Okay.
Alhamdulillah, no. This is taxable profits, okay? And we are see, okay, okay, I got it. Okay, see, this is taxable profits. Now, is it right? Now, what happened? How you got this one? This is nothing but 960 into 0.3.
Yes, I understood.
Hmm.
I mean, if we will deduct from 960.
No, 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 no. We will not deduct from 960. Whatever is there, is it right? We take this, we will take this, and we are going to make here.
Okay.
We deduct it from the profit before tax. Is it right? We'll deduct it from where? We'll deduct it first. See, now you see the difference. Profit before tax is nothing but this is called as a accounting profit. Okay? Profit before tax is a accounting profit. Taxable profits is nothing but, is it? Taxable calculation of income tax, calculation of taxable profits is nothing but, taxable profits is we will do adjustments. Is it right? How much we are calculating, we have to add depreciation, we have to deduct allowances for the asset, then that whatever the amount we will get, on that basis we will calculate tax expense. Is it right? This is entirely different from what it is there. It is only taxable profits. Is it right? It is only what? It is only taxable profits. Are you clear now?
Yes, it's clear.
It is only taxable. On these profits, we'll calculate tax. Fine. Now, this is point number A. Okay. Point number A. What is point number B? See, if you have the clarity here, things are very easy now. Okay. Only thing is you have to know the difference between an accounting profits and a taxable profits. That's the first thing we are learning and very important. Okay. Now, what happening? Accounting for deferred tax. Is it accounting for deferred tax asset? Now, when you are talking about accounting for deferred tax, how much is the income tax expense we have to? What is the profits we are getting? Is that we are getting a profits of how much? We are getting a profits of 1000. Is it right? Getting a profits of 1000. Again, Again we have first what we have to do, step 1. Is it right? Step 1, calculation of taxable profits. Now you will understand. It will take time, okay? First one little bit new now. We are doing for the first time. Definitely we don't have. The moment we do the second part, it will be. Now what is the profit before tax? Profit before tax. This is the accounting profit, okay? This is the accounting profit. What is the profit before tax? Profit before tax is 1000, okay? Profit before tax is 1000. Now it's easy, it's easy, only it takes some time to understand. Is that every lecture is like this only. Every lecture is like this. Add depreciation. How much is the depreciation? 200. Okay, 200 is the depreciation. Is it right? Less. What is the allowances? Is it right? Tax allowances on assets. Is it right? How much is the allowances on assets? It is 240. Is it right? First year 240, second year 210, and third year how much? 150. Okay. Well, now how much is that? We should not do this, but fine, we are doing again. It is 960, 990 and 1050. Okay. Now the taxes, income tax, is it right? Income tax at the rate of 30% on taxable profits. How much is there? 288, 297 and 315. Fine. Now, okay, second one. Is it clear now? We have done the same thing. Okay, we didn't do anything else. Next, step 2. Step 2, what we are doing is we are calculating temporary difference. Is it a temporary difference and deferred tax? What is the carrying amount of the asset? Is it right? Carrying amount of the asset is how much? Carrying amount of the asset is how much? First year. Is it right? What is the carrying amount? Year 1, year 2, year 3. Is it right? What is the carrying amount? Carrying amount is how much? Is it right? At the end of first year, how much? Is it right? Carrying amount. See the things. Year 1. Is it right? What is the value of the asset? Value of the asset is 600. Depreciation is how much? 200. Carrying amount is how much? 400. Year 2, how much carrying amount? Is that 600 minus 200. First year depreciation, second year depreciation is 200. The carrying amount is how much? 3. Third year how much? 600. First year 200, second year 200, third year 200. The carrying amount will be how much? 0. Is it right? Next. What happened? We are talking about they gave us is it? Now, fine. Now, this is the carrying amount. What the rule says? Rule says, see, where is that? We will go back to the rule so that we will have clarity on that. Carrying amount minus tax base. Is it right? Carrying amount minus tax base. Is it right? what is the, this is the slide, is it? Accounting entries for deferred tax. First you have to take carrying amount, then we have to take the tax base as such. Is it right? Now, what is the tax base less tax base? Is it right? Less tax base. How much is the, see the things. How much is the value of the, what is the, I will put like this. Is it right? I will put like this so that it will not be, is it right? Tax base. It will take some time. 1, is it right? The carrying amount is how much? The asset value. Is it right? The asset value is how much? Asset value is 600. Is it right? Asset value is 600. Now, how much is the allowance is there? Allowance is how much? Allowance is 240. Is it right? Allowance is how much? 240. It comes to how much? Tax base is how much? 360. Is that tax base is how much? 360. Fine. Next, for the year 2, is it right? Asset value is how much? Same thing. Asset value is right. Is it right? 600. Is it? First year allowance is how much? Allowance for first year is how much? Allowance for first year is how much? 240. Allowance for second year is how much? Allowance for second year is 210. Is it right? 240 and 210. How much will have? 600 minus 240 minus 210. It comes to how much? 600 minus 240 minus 210. It comes to how much? Tax base is 150. Okay? Tax base is how much? 150. Third year how much? Third year asset, same thing. You have to, you do it separate. Asset value is 600. First year it is 240. Second year it is 210. Third year it is 150. Is it right? Means there is no tax base here. Is it? Whatever we are getting this one. Is it right? This is called as a temporary difference. Temporary difference is how much? 40. Temporary difference is how much? 50. Is it right? Temporary difference is 50. Here temporary difference is how much? 60. Less. Is it right? Temporary difference is it. Now, on temporary difference, you have to, this is the deferred tax. Deferred tax on temporary difference. Is it right? Deferred tax on temporary difference. How much is there? How much is that deferred tax on temporary difference? See, is that we have to see whether it is plus or minus. If it is plus, we have to increase the provision. If it is minus, you have to decrease. Is it right? At the rate of how much? At the rate of 30%. Is that? This is only temporary difference. Put there. Is it right? How much? 40 into 0.3. Is it right? How much will get? 12. 50 times 0.3. It comes to how much? 15. Here you will get how much? 0. Is that here it how much will get due. You have to make, is that how much is the factor which you are going to work it out. Fine. Is it clear about this?
Yes, it's clear.
Now see the things. Is it now how whether it is increasing or decreasing, you have to mention. Is it last year it was 12? Is it at first year it is 12? Second year how much they have increased? They have increased to 3. Is it right? Third year it is nothing. It is 0. Means it is not increased. It has been decreased. Is it right? Third year it is, means you have to make increase or decrease from year to year. Is it right? Year to year. First year it will be 12. Is it right? Second year what happens? It is increasing from 12 to how much? It will increasing from 12 to 15. Is it? It is increasing from how much it is increasing? It is increasing by 3. Now, third year, it is right. It is what happened? It is not increasing 15 to, it is decreasing to how much? It is decreasing to 0. Is it right? Means what happening? How much is there? If it is decreasing, you have to reduce the provision. Is that you have to, if the profits are increasing, if the tax is increasing, you have to increase the provision. If the tax is decreasing, you have to decrease the provision. Is it right? This is where we are talking in terms of what? This is the temporary difference. Again, I will explain you. See what is there? First, you have to take the carrying amount. Okay. First, you have to take the carrying amount. Carrying amount is nothing but the value of the asset minus the allowances. Is it right? Sorry, value of the assets, carrying amount is nothing but value of the asset minus depreciation. I will write here. Is it right? Carrying amount is nothing but value of asset minus depreciation. Depreciation year 1 is that depreciation 1 plus 2, depreciation 1 plus 2 plus 3. Whatever the aim is that this is what the carrying amount talks about. Fine. Next, what we have to take into consideration? We have to take into consideration the tax base. Is it right? This is the tax base as such. Is it? This is the tax base as such. How much is the tax? Whatever the asset value. See, asset value minus allowances. Is it right? Asset value minus allowances. Whatever the difference you are getting, that is going to be a temporary difference with respect to the taxable amount. Is that this is called as a deferred tax. Whatever the temporary difference we will get, on that temporary difference we have to calculate the additional tax. If that the deferred tax is increasing, we have to add more tax. If deferred tax is decreasing, we have to deduct that, we have to decrease that amount as such. Okay, now fine. How much we are making? 12, 3 and 15. Okay, 12, 3 and 15. Now this is step 2. Okay, this is step 1. Is it? This is step 1. Is it? This is step 2. Is it right? Little bit exhaustive. Okay, now what is there? See, I am putting one line here. Okay, I am putting one line here. This is step 3. Calculation of income tax expense. We have to know what is the net value. Is it right? We have to know what is the net value. Is it year 1, year 2 and year 3? Is it right? Now how much is the income tax we are paying? Income tax, is it right? Income tax as per where? As per 1 minute. Is it right? Income tax as per step 1. Okay, you take this one only, income tax as per step 1. Is it right? As per step 1. How much you are paying? 288, 297 and 315. Is it right? Add or less. Is it right? Add or less what? Deferred tax. Deferred tax. Is it right? From where we are going to get this? This is from the step 2. Is it right? 12, 3, is it right? Minus 15. How much we will get here? We are getting 300. We are getting 300. We are getting. Okay. Yeah. Now you understand what is the deferred tax? Means we are taking in the current accounting period only. We are not mixing up the things. Is it right? We are not mixing up the things. This much we have to do. Is it? Step one. See, without deferred tax, it's very straightforward question. Okay. Without deferred tax, it is very straightforward question. Nothing is there on that. Is it right? Nothing is there on that. I will put like this. Is it right? I will put like this so that you should not. Okay. Now it's what we have to do. We have to do step 4. Is it right? It is a step 4. Is it step 4? Statement of profit and loss. Is it right? Extract 1, 2 and 3. Is it right? We have to start with the profit before tax. Okay. Okay. We have to start with what? We have to start with profit before tax. How much is the profit before tax? 1000, 1000 and 1000. Fine. Less. Is it right? Less income tax. We have to take it from where? Step 4. Is that? We have to take it from where? Step 4. Now you will understand how the things we are working. Is it right? Now we will understand how we are uniformly, consistently we are reducing the tax for all the years. Means otherwise what will happen if it is not deferred tax? In 1 year tax will be more, in 1 year tax will be less. If you take deferred tax on any particular assets, the tax amount will be distributed equally. This is the significance, this is the importance of deferred tax when compared to normal tax. How much is the profit after tax? The profit after tax will remain same. Now, at this point, you will understand why we are doing this. Is that? At this, now you can say, is that? Otherwise, what will I just compare point A with point B? Point A, there is a inconsistency in tax payments. Is it right? Whereas in point B, there is no inconsistency. If it is related to that particular year, we have to deduct it from that particular year only. Is it? Now, what is the next one? This is we have done with respect to profit and loss account and with respect to balance sheet. Is it right? Balance sheet. How much is there? What we have to do? We have to take into current, non-current liabilities and current liabilities. Is it right? How much we are paying taxation? How much we are paying taxation? 288, 297. Is it right? 288, 297, 315. Is that in non-current liabilities? Is that in non-current liabilities? Is that we will show what? We will show deferred tax. How much is the deferred tax? 12. 12. How much is that? 12, 15 and 0. Statement of financial position. Statement of financial position. Extract. Little bit exhaustive, yes? Yeah, I know. Is it? Little means, see, that is the reason. If you do it very fast now, it doesn't make difference. Is it right? Just doing without understanding, there is no point of carry forwarding also. Is it right? There is no point of carry forwarding. Fine. Just revise it. If any doubt is there, if any doubt is there, I will give you one-to-one support to you. You are the one. My effort is, you want anywhere, any doubt, at any point of time, you message me. I am here to clarify the thing. Just to make you understand each and everything, I am putting the details as much as possible. Is it? Just you go through it, inshallah it will work. We will do this, okay? Now you understand what is the deferred tax. Is it right? Now we don't need any further. Now you have I can say the clarification has been increased little bit, okay? I'm not saying completely. Is it right? A deferred tax liability is recognized for all taxable differences. Is that's what we have done? Is it right? We have all taxable differences with minor exceptions. Now what we have done, see the thing, year 1, year 2, year 3. Is that? Now I will give that example. Deferred tax is what? They say 12, 15 and 0. Is that right? You are going to say that yes, first year 12, second year we have to make additional one, and automatically what will happen? The next year is the provisions will decrease. This is the temporary difference. What is the temporary difference? The temporary difference between the carrying amount. Is it that the temporary difference is the carrying amount minus the tax base? Is it right? Now you understand. The carrying amount, what is the carrying amount? Carrying amount is nothing but the value of asset minus depreciation. Is that what is the tax base? Tax base is value of asset minus tax allowances. Is it right? Minus tax allowances. This is the basic difference between a carrying amount and the tax base. Now you will understand that. See, give me time. That's what I ask you. A taxable temporary difference arising when the carrying amount is greater than its tax base. The liability is calculated and provided in full. That's what we have done. No discounting of liability. Is that we will never say it's a discounting of liability. Means we will never give any exemptions as such. Is that they say it is what they have done. They say that there is some minor exceptions. We will cover this minor exceptions. They will mention us in the example. What are the exceptions we have to take? Is it right? Now you understand what is the carrying amount, what is the tax base, what is the temporary. If you take this into consideration, what will happen? This is nothing but this is going to be a temporary difference. On this temporary difference, you will have the deferred tax. Is it right? That is the reason you have. I don't know whether you have noticed this or not. In the beginning, I didn't say it is easy. Okay, I didn't say it is easy. I know. Little bit new thing we are doing, as simple as that. Is it right? As seen in the, if you take into consideration tangible assets, is it right? Now what happens whenever you are doing revaluation for the non-current assets? Is it right? Just I will take 10 hours, just some time, and we will complete it. Okay? And tomorrow inshallah we will complete this lecture. Okay? Tomorrow we continue this one, and we will make it sure that we will complete it, so that next week we will start a new one. As seen in chapter 2, it is permissible to revalue. We will revalue the non-current asset based on what? Based on the fair value. Whenever a revaluation takes place, the carrying amount of the asset will change. Is it now you know the carrying amount? Carrying amount is nothing but the value of the asset minus the depreciation. Is it right? But the tax base will remain unaffected. Tax base is what? Tax base is nothing but the value of the asset. Is it right? Value of the asset minus allowances. Tax allowances on the assets. Is it? Tax allowances on the assets. See, carrying amount is nothing, is based on what? Carrying amount is based on the fair value. Is it? Carrying amount is based on the fair value, whereas the allowances is based on the specified factor. Is it right? The difference between the carrying amount and the revalued asset is otherwise called as a temporary difference. If we are talking in terms of temporary difference with respect to non-current assets, is it? Non-current assets. Now you have, what is the temporary difference? Temporary difference is nothing but the carrying amount minus tax base, and give rise to a deferred tax liability as such. Is it? Which will be taken into with respect to revalue. What we are doing? Definitely, if it is when you are revaluing, it will be more, or the value of the asset will increase or decrease depending on the situation. Is it? Now the most important thing is where we'll take this. We are going to take this in what? In the OCI, other comprehensive income. If you take the question bank which we have done in the on Thursday in the question bank we have done, any revaluation will taken in the profit and loss account. But with respect to taxation, any revaluation will be shown in where? Other comprehensive income. This is the basic difference. They will ask you by twisting the question as such. Is it right? Rather than to the profit and loss account. Fine? It will take, we have time, okay? We have time about almost 10 minutes, okay? Right? We will complete this. It's a small one. Is it? It takes revaluation of the current asset. Is it right? Now, can we start? Can we stop here? Okay, no problem. Fine. See, I will not. I don't want to force. Is it right? I will not never force anyone. Okay. Fine. I will stop here. Fine. No problem. Nothing will happen. If